Hey everybody. So today was one of those sessions where the market wasn't really trending. It was stuck in a clean range between 21,300 and 21,500 on Nasdaq, as we have been for the past multiple days. When I see that, I'm not trying to force anything or predict a breakout. I just let the price come to me. We pushed in the top of the range. We grabbed liquidity above the near the 21,500, and that's where I mostly stepped in short. That's where I made most of my money. A simple idea, tight risk, and I didn't really overcomplicate it. Today I ended up taking a little bit more than 3 trades. I took 3 trades, 2 winners and a small loss, and that was more than enough. And I locked it at $11,300 profit, and I just called it a day. In this video, I'm gonna break down the full setup, show you exactly what I saw, and walk you through why simplicity like this works over and over and over again. This video is really just about showing you how powerful it can be to keep things simple. If you understand the range, if you trust the levels, you don't need to trade all day. You just need to wait for your spot and execute. And the best part is I call this trade live in Discord, full trade, full alert, full commentary, everything in real time. So if you've been watching from the sidelines and you're trying to figure this out on your own, come trade with me. None of this is hindsight. You could catch these setups live with us if you're in us with the room. So let's go ahead and get right in the video. So I woke up at this point. I typically skip the first hour for 30 minutes to an hour. So let's go ahead and show you guys what I was looking at. So if we look at the past multiple days, we see that the market's been kind of stuck in a range. You see here so since May 14th, we've been balancing at the 300 area, and we've been selling at the 500 area. So every time we go to the 500, we sell. Every time we go to the 300, we basically get bought. Even when we gap down, we ended up running all the way back up just for us to gap down again. We open up a little bit, and this is the 5-minute chart. We see we have some resistance off the bat at 430, and we get some resistance back again at 450. So I draw a little box where there was some overnight resistance at 480. So I draw a little resistance box between 440 and 480 right there. So this is mainly my resistance box. We have some support near the 360, but I'd rather wait. If I was going along, I'd rather wait for the 300 area just because of how strong it is. It was strong here, 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 here. So we see over past 4 or 5 days, the 300 area has been extremely strong. So at this point, I'm thinking, okay, I'm only interested in shorting, somewhere in the here, or maybe around 500, or taking a long somewhere near the 300. And as you can see in Discord, I also said if we look at the bigger picture, Nasdaq can't break over the 21,500 mark. Every time we go there, we sell. So I am now possibly looking for shorts. And so this is the 1-minute chart. Let's get to it. So now, first things first, now I'm realizing that, hey, we kind of have this, possible short area up here. So let me draw a little box, Control R5. So every time we go up here, right, we sell. And this is not random. Every single time. So we're in a range, right? Up, down, up, down, up, down. Every time we go to this 420 to 435 area, we basically sell. But we know there's a little bit more of a, a little bit harder resistance up there near the 450. So I'm looking into shorting somewhere around the 425 to 435 mark, somewhere up here, maybe even 440. And the stop would be right at 450, somewhere up here, right? If it just blasts through in this area. If it stalls again like this, where there's a bunch of wicks, I'd look to take a short. But if it blasts up, then I would obviously, try to take it somewhere here. And as I said in Discord, I said looking for a short near 420, 430. I outlined the same box. I said every time we basically go here, we sell. We go here, we sell. We go here, we sell. We were here, sold. We were here, sold. We here, sold. So we know the opening range, high area, and the mid are super strong resistance. Let's go ahead and keep going. Remember, I'm not trying to take a long unless it's near 300. Let's make this box a little bit smaller. So we see price blasting through. And at this point, I'm starting to get a little bit interested in the short because we know we have a bunch of resistance up here, but I'm not willing to take a short if it's going vertical. I'm looking for price to start slowing down. So I want to see some of these upper wicks. I'm trying to see some of these upper wicks. So if we don't get continuation after this candle, I will ultimately try to take a short, draw a little box, something like this. So something like this where, right at this 440 to 450 mark, I'm looking for another short if we're blasting through. So I take a short. So we get our first red candle. In this area, I would, if you're long, you would expect some continuation. But since we are balancing, right, we're up, down, up, down, up, down, and we are at the higher end of it, I would expect the market to come down from this area. Since we rejected there last time and we came back down pretty hard. I would expect the market to come down near this area again, and my stop is right above this wick of 450. So as I say, right as I get in, I say shorted 440, and my stop is at 450, basically right at these highs, just in case it breaks out, because it's very well a possibility, right? And I say my target is 415, which is somewhere down here, basically where we were bouncing last time. So we could draw a little rectangle like this. Every time we came down here, we bounced, so that's my target. I added just like 2 more contracts there, 3 more contracts there, whatever, just because we're stalling in this area now. My risk is really small, the same exact average of 440, and my stop is still at the 450 mark. So as long as we keep consolidating in this area, think about it, buyers cannot push this price up, and since we are in a balanced range where the bottom gets bought and the top gets shorted, I will very much lean on the top side to try and take this basically back down to 415 or maybe even 400, right? And at this point, I'm just letting the trade work out. We either take my stop at 450 or we go to my target and we end up going straight to the target where we bounced at 415. We ended up going to like 412, yeah. But my target was 415, as I said. And it was really that simple. Like the market just keeps on going up, down, up, down. I shorted at the exact same area where we bounced, where we rejected from last time, and it came back down. Now, here's a little bit more of the nuances that were behind it. So you see at this candle right here, and at this candle right here, there was a lot of sell orders. So we could see here in this candle, there was 200 on the ask, another 200 on the ask, another 200 on the ask, another 200 on the ask, 90 filled there, 80 filled there, 150 filled there. So all these are basically passive sell orders, even though it's getting bought on the breakout. All these are basically passive sellers that have been showing up the entire session. So that's what made me a little bit more confident. Because think about it, if there's so much buying happening, a little bit over 1,000 lots at 5 different levels, why are we not breaking higher? Right? Think about it. If there's so much buying, why are we not going higher? Then you realize, hold on, it's not a buyer, it's a seller, right? But I mean, for every buyer, there's a seller, but for every seller is a buyer. But in this case, it was is more of a passive seller in this area that I would come to side with, and we see some exhaustion in this area where price is not able to break a little bit higher, even though there was so much quote unquote buying power, right? There was so much buying pressure, and we end up going lower. And then in this area, we get another seller at 445, so somewhere up here, and the guy was trying to sell another 200 lots, and then I flatten at 415, and we catch 25 points on the recap. We're basically in balance. We zigzag. I only want to trade at the extreme, so I only want to buy down here, and I only want to sell up here. Anything else is a no. That's literally how I get the best risk reward. You see, in this trade, I was barely down at all. I was basically almost the entire time in profit. I wasn't up the entire time, but I was barely down at all. And that's because I'm trading only at the very extreme levels. And I waited until all the big orders were filled, just so there's no more like chasing. And then I had to stop at the highs. And yeah, that was basically it. A very, very simple trade, and we could keep going. Um, so I'm gonna take this box off. So at this point right here, I'm thinking, okay, maybe there's another short opportunity in this area. Um, we're already seeing some wicks again. Maybe if it comes down to this 440 area again, the same area where I took it again, and then my stop would be right over 453, so somewhere right above this high. I could take it short again and hopefully target the opening range. So we're basically just zigzagging. I'm shorting the high, I'm covering at the low. So as long as it keeps bouncing up and down, I'll just keep on milking it over and over and over again. There's no reason for me to think otherwise. If it doesn't work, it doesn't work. But when it does work, it pays a lot more than when it doesn't work. So it's positive expected value for me to just keep on trading it until it doesn't. We start to see some signs of resistance here. So we start to reject here. We see an upper wick here. So at this point, we see another rejection here. So this is where I enter the short. I enter the short at 445, 443, whatever. And then my stop at this point is right above this resistance right here, right above today's high. And we start to see a little bit different action where it's a little bit faster, and we just get a random pop there. I don't think it was news. And I accidentally sell some here, and then I stop out the rest. Just because it was a news candle, I got slipped a little bit, or not a news candle, popped really fast. So I got slipped a little bit at, 453, 454. Right here. My initial stop was 453, but I think I got filled at like 55 or something. So just because it popped really fast, it's like 2 points off or something. So that was my stop. I ended up losing, right? I shorted the exact same area, but I had a super small stop right above this high, and I ended up losing. No biggie. It happens. It's all good. Nothing I could do about it. And you could see in Discord, I shorted 443. So I gave the heads up before. I was looking to short 445 to 455. I shorted 443, 453 stop loss. Same setup as before, right? It looks like it wants to break out. So just because it was acting a little bit differently, we didn't see any of these, red candles or rejections. It was a little bit stronger. I said, it looks like it wants to break out this time, but same setup. So I'll just take it again. And I ended up getting stopped. And it is what it is. Sometimes we're not going to, it's not going to always work, right? It's eventually going to break out in one way or another. Let's keep going. And then I take one more trade. So at this point right here, I'm looking at this area and I'm thinking, okay, wait, we still have another great short opportunity that we're kind of, missing out on, right? We are basically still struggling to go higher. So we had this rejection. We go a little bit higher. We're like 15 points higher, and we're still rejecting like a lot, right? We're still not moving higher. We're still barely able to get above. So at this point, I'm thinking, okay, this is possibly another chance to go short, right? And if we look at the 5-minute chart, which I'm about to show you guys right here, the 5-minute chart, remember the resistance we plotted a little bit early in the morning, we're still rejecting in it. So as long as we're kind of under 475, 480, we can make this box a little bit bigger, right? Actually, it doesn't matter. Oh no. Okay, anyways, as long as we're kind of under this 475 area, we're kind of still, bearish, because sure, the market rejected here. It's starting to look like it could reject again. We see triple wicks getting formed up here. And then my stop would ideally be just a little bit above these wicks, so somewhere at like 480 or something. So I'm looking at a possible short again to get back into the range. But I would ideally only take the short if it starts to fail like a little bit down here, not when it's up here a little bit. If it starts coming a little bit back down, just so I'm not, trying to get the top. I'm trying to get it on the way down. So somewhere like this, after it's already started slowing down, then I'd start shorting, or after I already proved that this is resistance, then I'd start taking it instead of, shorting all the way up here, because for all I know, it could just keep on going up. But if I see some selling beforehand, then I could short with a stop at a proper high or something. So we keep seeing consistent selling, right? Where every time we go to this 70 area, we just keep on selling off. So we initially started seeing the wicks up here after this blast. It's same idea, right? We had this blast up here and we sold off. We had this blast again, at 65, and we keep selling off. You see we're seeing a ton of upper wicks. So that's telling me momentum is dying up here, right? We're seeing some exhaustion. If the buying was so strong, why are we not going higher? We're seeing a ton of upper wicks in this area. And remember, the bigger time frame chart is telling us that anywhere near 500, that's a great short, right? So at this point, I'm looking to take short, and my stop would ideally be right above, 475. So somewhere up here, right, just a little bit above these wicks, right? Where just in case it breaks out above, I could at least just be a little bit safe. So let's go ahead and keep this going. And ideally, my target would be where it bounced last time at the opening range high. So we know this used to be resistance, resistance, resistance. Now it expected to be support, but there's a chance it could break out all the way to the downside. But for the sake of just following my rules, I always TP at the next support. So I am looking to TP somewhere around 435 to 440, somewhere at this opening range high area where we kept bouncing last time. So at this point, I'm not really looking to do anything. Either the market goes in my way, or it just takes my stop. I'm not really doing anything. Um, I'm looking to take my profits at 435. It's kind of like a hard TP. And if we also look at the bigger time frame, so we are at 1324, right? So if we also look at the 5-minute chart, which I'm about to pull up right now, we see, look right here. We see why I'm picking 435. So we had the rejection up here. And now at 440 to 435, basically this area, this used to be, pretty strong resistance, which I would kind of expect to become support at least. So it was resistance here, was resistance here, was resistance here. And we see the market's trying to wick up here at 450. So just in case, the market is trying, there's still a chance in my head as well that we go back to this upper distribution around the 500 area. So not to fade a trend, because look what happened here. It's basically the same action. We went up, we struggled, we came down, and then boom, we pumped. So I could possibly see the market doing something like this. So not instead of reacting, instead of predicting, sorry, I'm looking to react and take profits around this 435 area where we kept bounce rejecting from last time. And my stops at break even at this point, so right at 464, we actually get really close. We get within like a few points or something. We end up falling like crazy. And you can see I end up taking my profits at 430 instead of 435. It's because we were falling so hard, so I just trailed my stop. And right as I saw a wick, I basically just TP'd, and that was the trade. I think we ended up just continue falling, which I kind of missed out on a lot of profits, unfortunately. But that was basically the trade. If we look at the 5-minute chart, right? Oops. I don't know why it keeps doing that. We see that we ended up going to 435, but then so I was done trading at this point. But as you see here, we literally kept rejecting this 435 so many times, making a massive resistance. Basically same resistance here, same resistance here, same resistance here again. So there was a great short opportunity to take it short of 435 something with a stop at like 455, risking 20 points, and then targeting anywhere somewhere down here. And I don't really know what happened, but the market just kept on falling. I mean, moral of the story, I was just trying to, because we ended up going to 300, and then we end up literally reversing the entire way back up. I was done trading at this point. I'm already up $11,000. There's no need for me to push it. But what I wanted to show is the strength of super strong support and resistance levels, where we had the super strong resistance at 450 to 500, then we have this insanely strong support at 300, and that ended up literally reversing all the way back to 450, I believe so. And yeah, like just insane. And then look what happens. We go to the 450 area and we reject. We come back all the way back down. I don't think all the way back down, but we reject the cool like 50 points, I believe. Yeah, at the same exact resistance level. So as long as you can stop predicting and start reacting to price levels, you're gonna become a lot more profitable. Because look what happened: rejection, rejection, rejection. We shorted literally the top right here after we saw it stall near the highs because we were bearish, because we are literally near the upper range. Not only are we near the upper range, we saw that the market keeps rejecting here, here, and here, and here. So right as it broke out, it couldn't fail to go any higher. So it took it with a small stop, and we wrote it down. And yeah, that was basically the trade. I hope everything was simple. Everything was called live. So if you guys can see here, I started looking for the short up here. Shorted 463 to 465. So because I shorted at a few levels, so my average was around 464. And we kept seeing the seller. So the seller came back. You see, he was trying to sell 200 lots at 475. So right at my stop, he's trying to sell another 200 lots. And when the market started falling, he started selling a little bit lower. He started selling at 470. So he was trying to sell 70 and 75, so around 300 lots there. And the 5 minute was struggling to go up there with some delta absorption. So we kept seeing, buyers basically get stuffed into a bigger seller, and was targeting the opening range high where we bounced last time, right? And then I said, as long as we break a little bit under the 60 where we kept bouncing, the 55 area, we should flush pretty hard, which is exactly what happened here. And then I moved my stop to break even. So after I saw price bouncing on 450, I just decided to move my stop to break even just in case anything happens, just in case we get a news candle or we pump like crazy. So I put my stop at break even. Very luckily, we didn't go there. We were like 2-3 points off. And when it came down to 430, which is my original target that I called up here, targeting 435. So I gave my price target beforehand. Right as it came back down to 430, I took my profits and I called it a day. Patience, just have to practice. Even it doesn't matter how slow the trade's going, as long as you're not wrong. You always got to think, as long as you're not wrong, you're right, or at least that's how I do it. And over 92% of our community ended green today. So anyways, I hope this video helps. You have to. I think the biggest takeaway for this video is you have to identify the type of day it is. So if it's a range day where prices just zigzag, 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 you always want to buy at the lower end and you always want to short at the top end. You don't really want to trade in the middle. So somewhere here, somewhere here, somewhere here. You want to stick to the extreme prices. So if you see I shorted here because it was resistance, 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 it didn't work, but that's fine. And then when I saw price stalling up here near the 465, 470 resistance, there was a bunch of resistance at the overnight level at 480. So when I saw a bunch of resistance near the 480, I shorted again with a stop of 75. I actually moved my stop to 80 later, which I did say up here. I said moving stop to 80 just in case it sweeps, it fills this guy at 75, then it comes back down. So I moved my stop 4 or 5 points above. You basically just want to stick to the extreme levels. You don't want to. The more you trade, like, let's say you want to get a bounce here. Let's say you want to get a short going. Let's say you want to get a long going. You're gonna get chopped up. You're literally gonna die of so many tiny little paper cuts. If you could just stick to the extreme ends of the chart, I guarantee that your profits will literally skyrocket and your risk will be much smaller on all trades. People always ask me, how is my risk so small? It's because I'm trading at extreme levels. I'm always trading at the complete end of the chart. I'm trading at the complete end of it, where my stop is so small. My stop is literally at the end here. So if it doesn't work right away, if it works, I get paid fat because it goes all the way back down. If it doesn't work, I lose a small amount, which look what happened here. Compare the lines where you look at this line and then look at all this line, right? That's just how much my winners should be bigger than your losers. If you could just stick to the extremes of the chart. I'm not trying to talk too much, but I just want you guys to simplify your trading and stop overthinking, stop overdoing, stop micro scalping. I want you guys to plan your trades before, set your risk, set your target. Once you're in the trade, either let it go to TP or let it go to your stop loss. Stop cutting trades early. Stop taking profits too early. Stop cutting them too early. let the trade play out. You already did the hard part. The hard part was already planning the trade, figuring out where to enter, figuring out where to exit. That was all the hard part, which was done before the trade. Once you're in the trade and there's money on the line, our brains tend to go cuckoo. They go, they end up going crazy. And this is where we are, oh my God, we think there's a buyer, we think there's a seller. Oh, we think the chart could go up, we think the chart could go down. This is where our minds go to complete shit, which is why I always emphasize on planning before that you go into the trade at all, which is why there's no micromanaging anymore. Once you're in the trade, you either let it take your stop, just be a fucking man and let it take your stop, or it comes to your fucking target and you make money. It's a binary result. You're either gonna lose or you're gonna win. If you keep micromanaging, you're gonna realize you're gonna take profits too early. You're gonna hold on to losers for so long because you don't have a concrete plan. You don't have a system. My system is I plan the trades beforehand and I let them play out. If I win, great. If I lose, great. It's if I lost here, it doesn't matter because look how much the winners are. They're bigger. It's just a cost of doing business. To make money, you got to put some money on the line. There's no free money. Nobody's gonna hand you money for free. You always got to have something at stake. So, anyways, I hope this video helps, and I will see you guys live tomorrow. I'm running a 25% off sale, so I'll put the link to trade with me live in the comment in the description. So if you want to join me for live trading, welcome. And I'll see you guys tomorrow. We are up a little bit more than 20,000 on the week, so let's end the month on a great note. There's 7 trading days left, so hopefully we end on a great note. Again, sorry I talked too much, but thanks for watching, and I hope this video helped, and I'll see you guys tomorrow. Take care. Thanks for watching.